Okay, folks, welcome to another Thursday Night Stock Charts Live. This is where we review the potential, in air quotes, potential closing price action of the stock market. We have one trading day left to go. We are going to review the weekly charts. Hey, Franklin, John Spencer, top of the morning to you over in New Zealand. And who else do we have here? I can't. I know you've been here before. Inova G. I'll try to get that right. Hello. Wondering if you have looked into OPTT recently. The last time I looked at OPTT was the last time Franklin asked me to look at it. That was a while ago. We'll look at it tonight. I haven't looked at it in a while. So, is Karen Trader on yet? Cena, hey brother, good to see you. Pardon my appearance. I had to rush back from the gym. I had technical issues. I couldn't shower. So let's do this. Let's start with economic data on the week thus far. A lot of it. And normally during earnings season, economic data really doesn't matter that much. But this week it did. Tuesday, we had CPI data that was released, both that headline and the core. The core is X food and energy. Very hot, almost double what was expected. Yesterday, Wednesday, the PPI, the producer price index, very, very hot. And at the same exact time as they released this data, you have Fed Chair Powell at the same exact time. They released his statement around the same time. He testified later that we're all good. Don't worry about tapering. We're all good. Yeah, it's not transitory anymore, this so-called inflation. It's going to be around a little bit longer, but don't worry about it. We're all good. Stocks rallied for a while anyway. That all ended today. Fed's Beige Book came out yesterday, and yeah, Frank, I got a long way to get back to shape, man. It's painful. Hey, Will, how you doing, man? Hey, Bob, how's it going? Finally, a day without rain. Yeah, it's been a crazy summer so far. Crazy summer. Today, initial jobless claims released, came in as expected. Continuing claims, I don't know what the expectation was, but less than the prior read. Import price index as expected. Empire State Manufacturing Index. This is a very, very good number. I don't want to be all doom and gloomy here. When you have a good number, you have a good number. You want to say it. Very good number. Let's see what the headline is here. Yeah, New York Empire State Manufacturing Index soars to record high in July. Very good number. We'll see whether or not that turns into a trend. That's a good sign. The Philly Fed Index, big miss there. Industrial production, miss. Capacity utilization, about what was expected. And Fed Chair Powell in front of the Senate, I believe, today. And tomorrow, retail sales. We'll close out the week with that. Consumer sentiment index, important. Watch for a build in inventories. I went to go buy I have a robot for the pool, but it runs off of a motor. And I went into Leslie's Pool Supply to pick one up today because mine is just shot. It's like 10 years old. And they said they haven't seen one in about 3 months. Nothing in stock anywhere. Hopefully I can have it rebuilt by somebody. I'll get gouged there. So, also I have to buy a new one. So, inflation's everywhere. So think about it. I may have to, rather than buying a new motor, tell me about how the Fed's going to pick this up. Rather than buying a new booster pump motor for my robot, I may have to go out and buy a new robot, which is only a few years old, the one I have, and or an electric one, which is really what I want to move up to. So, crazy. I mean, these are the types of inflation that's very, very hard to measure by the Fed. There's just no inventory. So shocking to me, and oh well, my tale of woe of the day. Something to watch out for. This came out after the close, 5:40 p.m. Eastern Standard Time. Things are really ratcheting up, and I always like to talk about geopolitical binary events that can force the dollar up higher, along with bonds as well as gold and silver. And this is getting hot. What we did today was we landed. I'm not saying it's right, wrong. I'm not passing judgment here. I don't like the Chinese and what they're doing on the South China Sea, but this is a very provocative event that we did here. U.S. Air Force plane makes unannounced landing in Taiwan, outraging Beijing. You want to think about it this way: the way that the Chinese, when they look at the United States, which frankly is declining and declining rapidly in terms of stature, and they are advancing dramatically. They came out of COVID unscathed, no ramifications. They're all good. Maybe a little bit of supply chain shift, but they're becoming very, very emboldened. The South China Sea, for all intents and purposes, is a fortress. And when you look at it from their perspective, it's like you landed a military transport plane in LaGuardia Airport. That's their attitude. And things are getting heated up. At some point in time, there's going to be an event. I don't know what it's going to be, but there's going to be an event. So buckle up. The Black Sea is another flashpoint. What we're doing there, I'm not quite sure. It's as if we want to start a war over there. I'm not for that. I don't understand it. This I kind of understand, where flexing a muscle a little bit. The Black Sea, I don't understand what the purpose is. I mean, the Russians have a sizable military, but nothing compared to what they did back during the Cold War days. Gunlack, Jeff Gunlack, came out earlier today, and he warned the dollar doomed and at nosebleed levels. And I agree with Jeff. He's been pretty steadfast here. No doubt about the fact that we're on the same page, as we need to be long of gold, the miners, silver. I would like to add more gold. If you're looking to buy, excuse me, not more gold miners. I don't own gold. I own gold miners. I always do that. I'll buy physical. I won't buy the paper. So Jeff believes that the dollar is doomed. I agree with him. Why? It's because more than 25% of all dollars in existence were printed within the past 18 months. Think about it. The law of supply and demand. You also have a Federal Reserve that has come out this week and frankly said, yeah, you know, we said it was transitory, this so-called inflation, but no more. Forget about that. It's going to be here a while. Not too long, but it's going to be here a while. Next month, it's going to be here. Yeah, it's a few more months. Next year, it's going to be a few more quarters. After that, a few more years. And our quality of living goes down a toilet bowl. And they try to inflate away our debt. Don't forget, while those who are cheerleading the U.S. dollar higher, it looks as though they are going to push through another $3.5 trillion worth of human stimulus. I don't even want to open up the bill. I fear what's in that bill. But human stimulus, what I read into that, it sounds all good, warm and fuzzy, pixie dust and lollipops, but it's wealth transfer. It's all it is wealth transfer. It's paying people to stay home and do nothing. You're robbing their work ethic. You're robbing their skill sets to be able to work for themselves. And that's what the federal government is doing right now. The number one driver of inflation, in my perspective anyway, is wage inflation. Wage inflation. Why? It's because you have small business competing against the federal government for employees. They're paying people to stay home and watch Netflix and eat McDonald's. It's crazy. But these are the times that we live in, and I don't wish time away, but frankly, I can't wait for 2022. Hopefully the elections are not as bad as what I expect, and we get a turnover in the House and Senate. So I'll share this with you. I haven't gone through this yet. I don't want to speak to it until I digest it. This is off of Zero Hedge. One bank's non-transitory inflation meter just exploded. This is from Bank of America. Bam. The needle is pinned. I don't know how they're measuring this, so I don't want to speak to it as if it's gospel. All right, let's take a moment and let's segue over and into the weekly charts. And what I always like to say is before we do a deep dive into these charts, what we do on Saturdays is that we get together with members. I do the week ahead commentary. I go through all of these charts again, and many, many times. What we're reviewing tonight will have changed by the end of business Friday afternoon, and of course by Saturday's production of the week ahead commentary. So what I say here, take with a grain of salt. We have one trading day left to go. I'll probably repeat that a dozen times, but I like to remind people because I can come off as being somewhat passionate, but it's certainly not definitive how the week is going to close, okay? So keep that in mind, and let's get to it. Let's begin with the 10-year yield. Weekly chart. I'm frankly very, very surprised to see this continuation breakdown on the 10-year yield. But to be honest with you, this time last week, and this is a perfect example of how one day makes a difference, we were trading down below this lower band of support only by the end of business on Friday to have rallied back to recapture this support level in blue. And I think that it can still happen yet again. And I think the Dow Jones Industrial Average was front-running that move today. We'll go to that chart in a moment. Because usually those Dow names, they do well when you have interest rates rising because it's a signal that you have expanding global economy, expanding U.S. economy in particular. So take this with a grain of salt. Let's go to a daily chart and see how we finished out the day. That's another weekly chart, daily chart. Not looking pretty. I have to admit, it's not looking pretty. I do want to point out one thing on the ultimate oscillator. And this is where sometimes, not always, but sometimes where you have an indicator that gives you a signal. Now, I'll talk about that in a moment. Let me just throw up some support and resistance levels here. Okay, so we're good to go here. So let's talk. All right, let's go to that ultimate oscillator. Obviously, the path of least resistance right now for yields is to the downside. Bearish key reversal bar on the day, and we closed just off the lows of the day. What I do want to point out is that sometimes your indicators send you a signal in that here on the 12th of July, ultimate oscillator broke out, and that was here. It was an up day, second consecutive up day. The next day was a follow-through day. That was the CPI day. And we're pulling back now to retest the breakout point. I don't use ultimate oscillator all that much. I'm more of an RSI stochastics guy, but I do pay attention when it sends me a signal. So I'm not ruling out the fact that we may just bounce back tomorrow on yields. But to be frank, these Stokes losing momentum. We may get a higher low here on RSI. Let's take a look at the 20-year bond ETF and how it closed out today, the TLT. This is a weekly chart, and the weekly chart is pretty god-darn healthy. I mean, pretty healthy. We're still down below the declining 50-period moving average. That's probably going to act as resistance. And while I'm talking about these bonds, you got to ask yourself the question. If you're a foreign Treasury Secretary and you're saying, you know what do I want to invest in? You know, what economy around the world is doing well? I want to buy their bonds. What's going to retain their value? Is it a treasury? Is it a U.S. Treasury where you're seeing inflation rising and you have a Federal Reserve that's saying there's no way, I'm fighting it? So you got to wonder what's driving bonds up higher here. Is it a manipulation of the yield curve by the Federal Reserve, or is there underlying strength in the economy? We don't know yet. So I'll go to the Federal Reserve's balance sheet. I meant to bring that up earlier, and we'll see how it expanded this coming week because we may get a clue from that. But this is a very strong chart. I wouldn't have expected it with yields. With inflation increasing not just on the CPI but on the PPI, nearly double the expected move. Volume very strong. Daily chart. RSI very strong. Nothing not to like here except the narrative, the why behind the move. It's a very strong chart, both the daily and weekly charts. Volume rose more than yesterday. And this is the first closing day above, we closed above the 200-day moving average back here. The first time, this happened on July the 7th, the first time since back here in November of 2020. So this is significant price action on the TLT. So I can have my opinions, but all that matters is what the chart is doing. The rest is conversation. The tips. Weekly chart, new all-time highs. Tell him, nice to hear some truth, brother. You got it. Come here for the truth. I'm not here like CNBC and Fox Business to take parking space up in your head. No way. Yeah, corporate welfare, Jonathan, is definitely okay. Even the big tech names, they're sitting on mountains of cash. What do they get? Welfare. Tips weekly chart up over 0.75% on the week. A powerful, powerful move. And folks, let's face it, this is new. Quarterly chart, new all-time highs. And we're going up higher. Daily chart. You know, I was worried yesterday and the day before about this price action because when you get these fades, these filled candlesticks at new all-time highs, it's kind of concerning. But what I read into this is that you had trepidation in advance of the PPI data, and that trepidation of bulls, Treasury inflation protected security bulls, in advance of the PPI data. And after that announcement was released, they just ripped up higher. Abel, hello, sir. How you doing? You got it, brother. It's a quiet night today. The U.S. dollar. Let's update this. Good. It's updated. I got to tell you, RSI looks outstanding. Our Stokes look very strong. Price action, a bit meh. We are trading above the 92.50 mark. If we close out the week above 92.50, that is significant. If we do get that, I would expect next week a retest of the 92.50 mark. If it holds, watch out. We may break out above the pivot point of this W formation here at 93.13. And we could go a lot higher on the US dollar. And now I know what I said. What I'm saying right now about the chart runs contrary to my belief that the dollar should move lower. We're not here to take parking space up in your head. If the chart is bullish, we're not going to talk our book. And believe me, a stronger US dollar will not help my portfolio. It will seriously hurt it. So I want the dollar to pull back. I really do, because that will help me. But we're not going to talk our book here. It's not what we do. So daily chart, US dollar, bullish key reversal bar today. We were down. We reversed the close higher. The thing to take note of is that gold didn't care. The miners didn't care. They all went up in tandem. There is concern out there. And one of the primary reasons as to why you probably saw money move into the US dollar is because you had people selling equities, and that just there was a demand for dollars. They were filling up money market accounts. So your prime brokerages needed to go into the money market, the currency exchanges, Forex, buy up in dollars and build out those money market funds. The VIX weekly chart, a brand new compression zone. Remember, we had broken out back here the week of the 14th of June. We pulled back, retest. This week, we're attempting a continuation move up higher. RSI is looking like a monster. We have higher lows, and we're hockey sticking up. We're still down below 50. Ultimate oscillator. It looks pretty ominous. Higher lows, breaking out now. Stokes, higher lows. Still a little bit weak, but the trend is beginning to change here. Daily chart. We saw a fade on the day today. RSI is now above the 50 mark. That means you're probably going to see some momentum build on the VIX. The only caveat to that statement is going to be that you have earnings that are going to continue to come out, especially your big tech earnings, your NASDAQ 100 earnings. They don't want to let this market fall. Believe me, I was tempted to go add into shorts today. I said no. They're probably going to bid it back up. Some Fed head's going to come out, say something, and drive the market up higher. So I didn't do it. I didn't take the bait. I may regret it, but we have our discipline. So the VIX is, let's put it this way, no new weekly low. We're putting in higher lows. RSI looking good. I'm becoming more constructive. Look at this. Look at this Stoke. Let's change this. Put that above where I normally have it. Let's memorialize the observation. And for that matter, we could do this if we wanted to, a more macro view. So we're building a rock solid base here on your stochastics. Now we're looking for that move up higher. And it's probably not going to be pretty for the S&P 500. The Dow Transports, weekly chart. A down week, nearly a percentage point. No new weekly low. Volume's going to roll in light. Stokes is still very, very weak. So for the next week or two, you don't want to go buying the transports. Why? It's because rallies tend to fade when you have both lines on Stokes trading down below the 50 mark. We know that. So don't get lured in. On a Monday, the futures are bright green. You want to buy some transports. Keep in mind the weekly view. Think about what they did earlier in the week. They tried to rally it only to fade it. Not much of a rally, but ultimately that rally faded. Daily chart. Now on a daily chart, I have to say, I'm constructive vis-a-vis the fact that we're holding this support level. The problem is that we have topping action. We can't even close above the 20-day moving average here in green. And that's a declining ceiling. Volume was good today to the upside. So basically what I like to do at a time like this is, A, not forget the weekly chart, because the weekly chart takes precedence over the daily chart. But we'll have some fun with it. We'll take our crayon out, draw some pretty lines, and we'll see. Do we get a breakout on RSI? Do we get follow through to the upside on price? This would be our pivot point if this holds. 1,500, thereabouts, give or take a point or two. And the reason why I spend so much time on the transports, because the transports are your canary in the coal mine, along with the energy stocks, for the economy. So very, very important. Look at the Stokes here. Horrible. Rolled over. We're breaking down. We have broken down. This is a daily chart. So beware the transports. The Dow Jones. Weekly chart. We are up 1/3 of a percentage point on the week. Very close to new all-time highs. We could be there tomorrow. The problem is no volume. Volume should come in above last week's up volume bar, but that's no consolation prize given the very light volume relative to the moving average. Stokes is still rising. RSI is still rising. Let's see how we closed out the day today. Daily chart. A very good day. We're not short of the Dow, so it doesn't bother me either way. But the Dow on a daily time frame broke out here on the 12th after putting in this W formation. Retest 1 of support, retest 2 of support, retest 3. You don't want to see a retest 4. Usually 3 is the max you want to see, because if you haven't gotten a continuation breakout by then, by day 3, that's a problem. So it's a very healthy day today. We closed at the highs of the day. Your indicators are looking rock solid. I think this gets resolved to the upside, but you never know. Volume just shy of average today. The S&P 500, a down week, nearly a 1/4 percentage point. Now, watch these Stokes. It's not going to happen this week, but next week, if we start breaking down, that's going to spell trouble for the S&P 500, because these Stokes are very long in the tooth. Volume light. Daily chart. I have another daily chart. Here we go. This is the one I want. Okay. Let's update this. Okay. So, your indicators is something that are just a tool in the toolbox, right? So we're not going to trade off of them because they're not at extreme overbought levels or extreme oversold levels. These could easily hook back up. So what I'm watching for is another run at prior highs. I'm looking for a lower high and then a breakdown below this lower band of support. We do have a lower high on the RSI, so momentum is beginning to wane. They're losing momentum. There's still momentum behind it, but it's losing it. Stokes, same deal here. The problem with the stochastics is this, is that we put in the lower high and we've broken down now to a new lower low. And you have a double top. I mentioned this to members last night on your ADX green, double bottom in red. So we spoke about a potential rollover last night. I'm not going to be the least bit surprised to see them try to salvage this and not allow it to drop. At some point in time, the Federal Reserve is going to get their approval to start buying ETFs, just like the Japanese did. Probably not until the next major sell-off in the markets, but it's coming. The small caps, of which we are short, and we have been short for a while and very, very patient. This is a catastrophe. One trading day left to go. We have a double top. It's time now to update this. And memorialize what we need to hold. 211.22 on the IWM must hold. It must hold. Because if it does not, we already have a lower high on price. If it breaks, that means we've broken down to a confirmed lower low. What does that mean? The path of least resistance has now changed from up to down. Your indicators are already screaming it. RSI has been putting in lower highs and lower lows for a while now, several months, but now we've busted down below the lower band of support. The stochastics are a complete basket case. Now, again, one trading day left to go. They must keep this party going. Come hell or high water in advance of the midterm elections, they must keep this party going. So while I think in the back of my mind I have every reason in the book to go shorting this market with reckless abandon, the Federal Reserve is a pretty nefarious bunch. And so are the politicians that are giving them their power. So I'm not going to underestimate the power of the Federal Reserve and the big stick that they carry. So that is me being as humble and showing humility as much as possible so I do not get too carried away with myself. Volume is probably going to come in on par with last week, if not a little bit higher. Daily chart. First, I want to take a look at the monthly chart before we go to. Yeah, so here's the break, and one of the reasons why we shorted the small caps, the primary reason, to be honest with you, was that we were so far historically extended relative to the 48-month moving average here, and so far above historical precedents regarding or related to the 3rd standard deviation Bollinger Band in red and the 2 standard deviation Bollinger Band in green. And we still have a ways to go before this is corrected. Daily chart. Now, the small caps were going. They were going hard. And then they caught a bid. I knew they were going to defend the support level. I mentioned it this morning on Swing Trading Today. Expected defense of support at this level. Sure enough, that's exactly what happened. Massive, massive volume. Stokes is still declining. We'll take a look at it. We'll do that in lieu of LABU. Welcome aboard, R-Train. I want to take a look at the final 15 and 5 minutes of trade on the IWM. Yeah, look at this. Look at this buying that came in. Five-minute chart. Big sell order. 5 minutes of trade. But honestly, we only closed down slightly. So there was a massive tug of war on that last 5 minutes of trade today. Okay, let's move on. The Tues, my arch nemesis, the Tues. Where is I forgot. I asked earlier too. I forgot the name. I'll remember it. Somebody who teases me all the time about if I'm still short of the Tues. Yes, we're still short. Down on the week. And no, we have not added. I'm not ready yet. Not with the Q earnings coming up. We want to wait until we get a feel for how earnings are. Jennifer trades. Yes, thanks, John. Appreciate that. And it's good fun. I'm not bashing it at all. So we're down on the week. Volume, very light. Now, again, we're not going to talk our book here. This is not a horrible week. The day, though, was a catastrophe. Down nearly 0.75%. But the same thing holds true here as with the S&P 500. You, as a short right now, what would cause me to want to short this market even further? It's not going to be one down day. It's going to be a more thorough pullback, and then a rally, and then a lower high, and then a break to new lower lows. That doesn't mean that I won't sell deep out of the money naked calls using the TQQQ to generate cash flow with a high risk reward return, because net, I have a bearish opinion on the Qs. Why? It's because I think that the yields are going down for a wrong reason. I don't know why they're going down, probably Federal Reserve manipulation, but once they turn around with inflation running rampant, it's very difficult for the Federal Reserve to manage the longer dated maturities, 10 years, 20 years. Forget about the 30 years. Very, very difficult to manage those yields. So at some point in time, Mr. Market's going to step in, and that's the bond market, and they're going to take control. So when they start driving yields up higher here in the United States, these stocks are just going to get decimated. So right now, we're not at that juncture. Yeah, it was a down day. It wasn't a catastrophe. We're still extended here. I think we're probably going to break to new lower lows fairly soon. Is that the end of this bull market? Not quite sure yet, but I'm not ready to cover. The banks. Weekly chart. You know, I got to say this. Despite the fact that we have yields that are dropping like a rock, the banks are holding up pretty well. They're down only a 0.25 percentage point. You had some big bank earnings come out this week. Mixed results for the most part. But net, not a horrible week. But I'll tell you, once yields start popping up higher, and we see sector rotation, well, let's get rid of this. Then the banks become very, very interesting. But we're not quite there. We need yields to move up higher. So right now the banks are a watch. Daily chart. They closed up on the day. They showed relative strength. Good RSI, higher lows. Stokes still look good. They haven't broken trend yet. A little bit of a fade off the highs of the day, but not bad, not horrible. Volume about average, just shy. So they're worthy of a watch. Technology sector, up on the day. Very fascinating price action of late. Normally the triple Qs and the XLK, they trade in tandem. That didn't happen this week so far. The Qs are down, XLK up by nearly a 0.5 percentage point. But we are fading off the highs. Daily chart. What's volume first? Horrible volume. Let's memorialize this. Daily chart. Now today, what did the Qs do today? They were down 0.7%. XLK, 0.82% to the downside. Volume wasn't bad. MACD is just ominous, man. We're losing momentum. I don't really use the lines too much, but the histogram really losing momentum now. So we may get a little bit more weakness here on technology. Let's throw up some resistance levels and support levels. You know, it's strange. Unlike the Qs have rolled over and putting in lower highs, but technology, higher highs, but they are rolling over. So the correlation between the Qs and the XLK of late is beginning to change a little bit. I will point this out. Potential double top on RSI. And we do have lower lows on our Stokes. And again, folks, we watch these not for anything other than just an identification of what the trend looks like. That's it. Okay, moving on. Semis. Oop. I knew that couldn't have been the semis. Hold on. What did I do? I screwed it up. I think I closed out the tab by accident. SMH. Now it's the Van Act family. Okay, Van Act. Here we go. All right, so the semis, pretty bad. We had broken out back here the week of June the 28th. Only to now, actually it was last week we rolled back over. And this week, a bearish reversal bar. Volume is light, but it's definitely above last week's volume bar. MACD very, very weak. Daily chart. Big gap down today, down nearly 2 3/4%. This is weak and probably going to get weaker. Big volume today. Institutional distribution today. This is why you saw the XLK trade down lower than the Qs. Besides the fact that obviously the technology sector as a whole has more high beta names than the Qs. We'll go with BI. Okay, you know what? I was thinking it was the sector ETF. I misread it. We'll go to Biogen later on. Let's go back to biotechs just to watch the sector. Horrible breakdown this week. Get rid of this. Horrible breakdown this week on the biotechs. This is a leveraged ETF, so don't let this percentage loss fool you. Divide it by 3. Pardon me. Daily chart. I mentioned earlier, beware of Stokes trading down below 50 because rallies tend to fade. Perfect example of that rule that we have. Big, big volume here. Avoid, avoid, avoid. Avoid. Sorry, folks. Consumer Discretionary's weekly chart. New all-time highs this week, but now we are showing a reversal. 1 trading day left to go. For all I know, we go to new all-time highs tomorrow. Daily chart. You know, I want to go back to the weekly chart. I just picked up on something. Yeah. I want to point out a bearish divergence to you. This is nothing to trade off of, but it's something to always, always keep in mind as a warning flag. As I always like to say, the markets send you signals. It's up to you to ignore them, but if you do so at your own peril. Take note of your RSI. And if I could ask you folks, if you could smash that like button, it really helps me out with YouTube. What happened to my lines? What happened to my lines? What'd you do? There we go. Okay. So what we're seeing here is a bearish divergence. What does this matter? What is an RSI? RSI is a momentum indicator. And what RSI should be doing right now, were this a very healthy chart, it should be putting in higher highs along with price. It's not, and it hasn't been doing so for quite a while. So this is a harbinger of bad news, unless, of course, ultimately this gets resolved with a breakout. So just a watch out. Again, nothing to trade off of, but if you're looking to buy your consumer discretionaries, your DraftKings, which is a nightmare, Starbucks, before you look at those charts and look to buy, go to your weekly chart, take a look at your RSI. Are you seeing a similar bearish divergence on those names? Daily chart. Daily chart down a little over a half percentage point on the day. Stokes weakening up, still above 50. They can get salvaged. Volume declining sequentially, not horrible. Energy, a very, very bad week for energy. Weekly chart, and this is what I warn. Watch out. We had a bearish divergence here and a bearish divergence here. We were putting in new, not all-time highs, new higher highs, but your indicators, your momentum indicators were failing to confirm. That's a warning. I didn't just draw these lines. I drew them weeks ago. And sure enough, not weeks ago, several days ago. And sure enough, we have now broken support. We are now down nearly 5.25% on the week. That is massive. That's a massive move. And here's your correlation of the XLE here versus oil. And the correlation, which is pretty much lockstep for a long time, is now beginning to break down. But still very, very healthy. Oil on the weekly chart, bearish key reversal bar, down nearly 2.75%. Obviously, energy taking it far more worse on the chin. Daily chart. Is Norris on? He's one of our members. I just want to make sure if he wants me to go over Exxon, we'll go over Exxon for him. Daily chart, not looking good here. Breaking down lower highs, lower lows. And you may be asking, why is he spending so much time on oil and energy? It matters. It's because, you want to take a look at yields, and you want to say, yields should be going up because there's so much inflation. And I'm of that camp. What keeps me sober and open-minded is that when I see the Dow transports weak and potentially getting weaker, when I see energy down by far, probably the worst performing group besides biotechs this week, when I see oil rolling over, that's not a sign of a healthy economy. So is the proximate cause of the reason why yields are declining so rapidly due to the fact that the economy is declining so rapidly? Yet we also have inflation, and it's going nowhere but higher. And that's no longer just me saying it. I have been saying it for a while. Now it's the Federal Reserve admitting it's no longer transitory. They're admitting it. So the market is sending us signals, and that's why we get together Thursday nights, Saturdays, Sunday nights, to get a view for the signals that the markets are sending us vis-a-vis the charts of the really serious sectors that matter: energy, transports, the Dow Jones Industrials, tech, semis. And we're not getting good signals here. We also have a lower high here And do we have a break? We broke down today on a daily time frame. We broke support and we closed there. So does this spell the end of energy and oil? No, no. But at a bare minimum, we're probably going to get a continuation breakdown. For all I know, this time next month will be at new all-time highs. Okay, on energy sector, not oil, but on the energy sector. But right now, short term, avoid, be careful. Emerging markets, looking good. I don't want to buy them until the dollar breaks. We're rolling over on a weekly chart with lower highs on your stochastics. That I do not like. This needs to get resolved. This needs to hook up. Momentum is going in the wrong direction. Larry, Jeff Gunlock says he's starting to invest in Euro equities. They're more, yeah, I would agree with that. They're more favorable than U.S. equities. He says emerging market equities will be in place to be as the dollar trends down. No doubt about it. Vietnam, India, Brazil. I am so in that camp, and I've been steadfast in that position for a while. I love Vietnam. I love India because of the supply chain shift that has to happen out of China. Don't forget, the communist Chinese, those are the same ones that during the beginning of, I can't really say the word anymore, the CCP virus. I'll put it to you that way. They said that they were going to, if we continue to blame them, they were going to cut off antibiotics to the United States. Think about that. I didn't say it. They said it. There must be a supply chain shift, and it's happening. If you listen to Kyle Bass, you may want to follow him on Twitter if you're on Twitter. I don't use Twitter for much, but I follow Kyle Bass. Very, very good when it comes down to China. Listened to an interview with him the other day. The supply chain shift is in motion now. Vietnam, let's bring up Vietnam. Correcting a bit here. Let's take a look at it on a monthly chart. Good, good. We want this to come in. We want this to come in. What's the EPI, I think, is India. Oop, a little bit of dyslexia there, Bob. Here we go. India. Let's go to a monthly chart. Look at this. Bullish. Bullish. Now, I was going over the chart for emerging markets of EDC, and this holds true for many. This is the Direxion Daily Emerging Markets Bull ETF. The Chinese, what they're doing now is that they're forcing funds, index funds, in particular international and global funds, to force them to take on Chinese-based shares. They need U.S. dollars. They have to have U.S. dollars. And it's a big threat to them. We could take them down tomorrow if we wanted to. I mean, they took over Hong Kong. That deal we have with Hong Kong as a separate entity, we could end that tomorrow, starve them of dollars, and you're going to see China go like this in a heartbeat. But these ETFs, they're loaded up. These emerging markets ETFs are loaded up with Chinese stocks. EDC is 30% China. I do not want to own it. Look what they did with Didi. They waited till it came public. Think about this. They waited till it came public. And then they rammed new legislation down their throats, preventing them from doing certain doing certain managerial actions that would allow them to grow their business. Basically, they stymied their business. How dare they? How dare they? You want to invest in these companies? Not me. No way. Gold. Is this the 15th? Yes, it's the 15th. A strong week. Up 1% on the week. We're struggling here, though. One trading day left to go. We want gold to go up higher. I think it will go up higher, but we're right at resistance. Today, we closed out above resistance. This line in blue. One trading day left to go. We want to keep an open mind. Stokes are hooking up. Love it. RSI hooking up. Love it. Back above 50 on the week. Daily chart. Daily chart. Stokes are extended here. That doesn't mean gold is going to roll over. What's going to happen is this. You're going to get one of these deals. It happened back here. Came extended. Pulled back. Hooked up. All right. What happened? 1 or 2 day pullback. No big deal. So a little bit of froth here. RSI looking good. A bit of a doji star formation today. So keep in mind, weekly chart, we're just above resistance. And on the day today, we got a doji star formation. The dollar looks strong. So if we get another move up higher on the dollar tomorrow, we may see a little bit of weakness on gold. Volume today was light. The miners, of which we are long. We are now up on the week, up nearly a third of a percentage point. Stokes are still declining. Don't forget this. This is one of the reasons why I don't want to go running in and buying more right now. I'd rather wait. I would love to get a washout. If you don't have a position and we close out the week above 46 bucks a share on the GDXJ, you want to nibble? Go for it. But no great rush. Let's go to a daily chart. Ooh, love it. Beautiful breakout. I've been such a doom and gloomer on these Stokes with members that I've been saying, man, hey, dudes, you got to be careful. Potential rollover here, lower high. And I was hoping for a breakout. We did get the breakout. Price, no follow through really today. No new daily high, but no new daily low. So a consolidation day. Ultimate oscillator looking good. Love it. GDXJ, are you junior miners? We're also long of, do I have it up here? No. The NUGT. These are your senior miners, but this is a leveraged ETF. Weekly chart, we're up over 3 1/3%. We're holding support. Here's what we want to see. You know what? Forget this. Let's do it this way. I'm making it too complex. So we are in a massive, massive triangle formation. So what we want here is we want to hold 60 bucks a share. $60 per share is critical resistance. If it doesn't hold it tomorrow, we drop back down below 60, I wouldn't buy any. I wouldn't buy that dip. Because if we close the week down below 60, I think that we may get a further push down, a washout on the mining stocks, because the dollar is still quite strong. So I'm keeping an open mind here. Now, if it closes above 60, I have zero problem with you opening up or adding to a position. Just nibble. And once we break out, let me go back to this. Once we break out above this upper band of resistance here, we're going a lot higher. A lot higher. Silver, weekly chart. We're trading down below weekly support. Stokes is still quite weak. I think we may rally back. Let's go to a daily. These are the silver miners. I'm sorry, silver miners. I think we may rally back by the end of the week. to recapture that support level. Daily chart. Very similar price action on the Stokes as to what you saw on the GDXJ. Let's go back to it. Right, yeah, that choppy Stoke action. This was resolved to the upside. I think the same may happen here. Note the chop. We didn't get the follow through, but I think we may get the follow through to the upside as soon as tomorrow. If we don't, I would not go catching the falling knife. We'll leave it off with silver. Up on the week, but lethargic trade here. Stokes may be flattening out. We're not sure yet. We'll see how we close out the week. Daily chart. Doji star formation, a sign of indecision. Light volume. Ultimate oscillator, hockey sticking up. Good to see. Let's do some chart requests, and we'll call it a night. How much time do we have? 7:02. Wow. I went long tonight. I'll do the charts that people submitted already. I can't take up any more. BIIB. I got to check the members there to make sure there's nothing submitted there. Let's log in. Ticker cloud. I do have two to go over for Jim. SPCE and F. All right, so we'll do Biogen first. Okay, so this is not good. We broke support. We attempted a breakout this week. It looked really, really good early on in the week, but we have since faded, and at current are trading down or closed down below the lows of June the 28th. So what do we interpret here? Well, we pulled back, rallied, lower high. Now we're breaking down to new lower lows. The path of least resistance, if we close down below 332.33, will have now changed to the downside. Let's check out seasonality. Folks, this is brought to you by TrendSpider, 35% discount code below. Let's go back 12 years. July is usually a pretty good month. July is usually up 75% of the month. We have half a month to go. We'll keep an open mind here, but we certainly don't want to place too much confidence on seasonality. It helps, but what matters most is your price and volume action. And at current, volume is nearing last month's high, which was up. So we're almost certain to surpass it to the downside if in fact we close down on the month. So, excuse me, this is a weekly chart. I apologize. Weekly chart. So we're probably going to take out the highs of last week. Very bearish. So lower highs and lower lows now. One trading day left to go. Daily chart. Yeah. Let's take the automated trend lines off. Let's throw them back on. Here, this is the power of the algorithm. These are my lines here. If you're not into drawing manual lines, the system does it for you. We broke support today. You got to avoid this. You have to avoid it. Even if you get a rally back, many times what will happen is you get a break of support. They'll rally it back in an effort to try to recapture what was support, will ultimately now act as resistance. So be very, very careful with this stock. Let's bring up SPCE. I sell the news event after last week's launch. Weekly chart. I thought I had alerts set here. Apparently, I did not. Ah, there they are. Okay, I had it off. That's why. All right, so my alert fired off. Okay. I thought I was losing it. Okay, so we broke support that I was looking to hold. Obviously, we did not execute on that trade out of fear that it wouldn't hold. Next price, we may see support. Oh, no, we closed down below it. We're coming here. If we close out the week below 32.15, we're probably coming down here to 28.28. So what we'll do is we'll create an alert. Keep a little bit of sensitivity. And we'll keep that active for a couple of weeks, and we're good to go. Daily chart. Broke support today. I would still stick with that 28 mark because that's where I think we're going. They tried to rally it. It faded. RSI well down below the 50 mark now. I would avoid this. Very, very volatile. You could easily see a 20 handle yet again. Ford. Monthly chart. We've broken down here on Ford. We have half a month to go. I don't want to be doom and gloomish, but we do have a weekly chart with one trading day left to go. Not good. Not good. Because we rallied, hit resistance, and failed to hold it. Now, if we close above, I'll get a number to you in a moment. No sensitivity. All we care about is a close above. They got to fix this. There we go. I don't think it's going to happen, but I'll keep it active for a while. Now, if we get a continuation move lower, support is down here. Oh, I meant to say, where is, keep in mind that at current, resistance is up at around, let's call it $15 a share. But this resistance level is declining. Next support level is pretty far away in percentage terms, at around $11.75. Daily chart. I would avoid this. We closed the day down below the 50-day moving average. Lower highs, lower lows on your RSI. I would avoid this. Watch the weekly chart. Wait for 1175. You may, just may, get some support up here at 1293. 1293 first. If that fails, 1172. Those are the price points to watch for Ford. OPTT. All right, I knew there was one I was forgetting. And Fastly for Able, we're going to leave it off with that. This never did bounce back, huh? It's untouchable right now. Where what for a macro play, and when I did a video on OPTT several months ago, and I like the setup, but this is a macro setup. This is really, you got to be really patient with this, if in fact it works. And I'll explain to you what I mean. Let's clean this up. All right, so we broke support. This is a non-essential resistance level right now. Let's remove it. What we want to see here on OPTT monthly time frame is for this support level to hold. At current, with half a month in the rearview mirror, we're trading down below support. So it's not looking good at current, subject to change. So this is not a buy. Now, where might there also be support below? Right here. $153 per share. And that's on a percentage basis, it's far away. But it can get there. Weekly chart. We broke support so far in the week. One trading day left to go. Now the automated trend lines are picking off support. These are the algorithm. Below here. I didn't even pick this off. I wouldn't have picked this off. I've been doing this for 30 years, and you learn a new thing every day with the automated trend line functionality. Folks, if you don't have TrendSpider, cheapest price on the web, use that discount code below. Sometimes I date these. So I just know the date I was looking at. And we're good. If we break the support level, we're coming back down to my support level here at 154 per share. And we're good to go. That's OPTT. We'll leave it off of Fastly. I'm not a lover of this stock. I don't like their exposure to TikTok. And the chart is not good at all. You know, monthly chart, we have resistance. What is this? What price point is this? At $62.30 per share. We have an inside month thus far. Here's the optimistic story. Let's clear this. Let's get rid of this. And do this. Okay, here's your triangle formation. The best that you can hope for right now is that we hold support. I get the feeling that this is probably going to break to new lower lows. Could be wrong. But at current, we're trading down below support level at 49.50. Let's go to a weekly chart. See how we're poised to close out the week. The weekly time frame showing a lot of pressure on support. I had an alert here set. Let's get rid of that. That failed to hold. This one expired too. So we've broken multiple support levels this week. Not one, not two, but three. Daily chart. You got to avoid it. You got to avoid it. It wants to go down. I mean, they tried to rally it today. They faded the rally. Until such time as they rally it back above, support. I'll give you a number in a moment. You want to use don't use the highs of the day as your support level. Let me get you another number. The number I like is 51.41 per share on Fastly because it marked support back here in the week of, on June the 10th. This is a daily chart. On June the 10th, it was a launching pad for a nice little rally, but that failed. Now we're trading down below it. We need to recapture it. Until that time, avoid. And with that, folks, thanks for joining in. I really appreciate it. And everybody have a great weekend. Profitable trading day tomorrow. So I couldn't get to everybody, but I got to rush way over time tonight. Be well.